that's hanging over markets, lack of clarity around Trump picks, but also we're starting to see a little bit of softness maybe creeping into some of the Trump trades and the dollar being first amongst them. What do you read into that softness over the last week or so?
Yeah, I think it's really interesting. I think most of the initial Trump trades are running out of steam already, with crypto being the big exception. But we saw stocks already have a bad week last week and kind of give back half their initial election gains. So the stocks trade ended first. The dollar turned yesterday. Now, what everyone's kind of wondering at the moment, is this just a temporary consolidation before the next dollar leg of strength into year end? And that is certainly the majority consensus out there. I'm a little bit more worried that we might see the dollar a little bit softer into year end. Seasonally, this tends to be a bit of a soft patch for the dollar. And I think a lot of people are realizing that, A, Trump doesn't get inaugurated for a while, then he's got to appoint people, then the policies are going to come in, and then we still don't know what policy mix will actually be delivered. Kriti's just outlined the uncertainty around the Treasury Secretary, which is very key to that kind of pick, many of these key policy picks for the dollar. So kind of people are realizing that maybe even if these policies are all very dollar supportive, they might be many months away from being implemented. Meanwhile, we've already priced in a bit of the rate support. So I kind of, with very low conviction, I can see dollar softening a little bit from here into year end, maybe before next year getting dollar strength again.
Mark, that's the phrase that I keep hearing time and time again. Low conviction, high uncertainty. Nobody really seems to have a handle on what is happening right now. How abnormal does the market environment feel at the moment?
Yeah, it's a great question. I was just talking actually over the last few days about how this is a particularly acute headline trading market. And what's interesting is people aren't really even trading concrete headlines, concrete news. They're trading the latest rumor or speculation around the appointments, which is kind of bizarre because the impact will be so far away. So I think this is has been quite an unusual market, but I don't expect it to continue for much longer. I think we're moving beyond that. We're going to go back to focusing on fundamentals for a while. Sure, we're probably going to be in a news headline and trading environment for the next couple of years, but I don't think it'll be quite as extreme as the last few days where we kind of whiplash on every single random speculation that we get out there on Twitter.
Mark, do Treasury yields go up or down when we know who the pick is?
I guess it really depends on who the pick is. But I think that, it's a good question. Is there an asymmetric setup there? I think probably the asymmetric setup is for yields to go higher, assuming it is a candidate which looks likely it'll be approved and everyone will be popular behind, because it will just be say, hey, we're getting a step closer to those Trump policies. And I think one of the consensus agreements is there that whatever Trump policies get eventually delivered, most of them will result in higher long-end yields, either through higher inflation, higher growth, or through increasing the fiscal deficit. There are many different components to that idea of higher yields coming from that.